Hi, Coach Greg Sneed here with Lifesaver Financial Services, helping you to keep more of the money you make so you feel better about your life. You can check me out at lifesaverfinancial.com. The month of April is Financial Literacy Month, and today's topic is going to continue with personal banking. There's different types of banks, and some are working mostly with consumers and some with businesses, yet most banks now tend to service both personal and business. So let's talk about the various types. Central banks are the granddaddy, which are the financial institutions responsible for overseeing and managing all the other banks. And here in the United States, the central bank is the Federal Reserve Bank or the Fed. And they're responsible for conducting monetary policy and supervising and regulating financial institutions. Next up, regional banks. They're also known as consumer banks, and they offer personal banking, products and services, and savings accounts and checking accounts, and all the other financial products, all the big names that you recognize: Chase, Citibank, Bank of America, Wells Fargo, and US Bank. Next up are commercial banks. And commercial banks help manage payments for customers, providing lines of credit to manage their cash flow, offer foreign exchange services for companies that do business overseas. And the major players there are US Bancorp, PNC Financial, Trust Financial, and Goldman Sachs. A regional bank is a financial institution that does not operate nationwide. And they have services in a US region like in the Northeast or the Western states. The formal definition of a regional bank is one between 10 billion and 100 billion in assets, and Bank of the West and East West Bank are examples of them. Savings and loans associations, also known as thrift banks, are lending and banking institutions that specialize in offering residential mortgage loans and accepting savings deposit. These banks are easy to recognize because most of them have the word savings in them, okay? Community banks are banks that are locally owned and operated. They're smaller, and there's no formal definition of them, but most banks fall into that category. They have less than 10 billion in total assets. They're smaller. They may work in a small community or general area, and most of these banks have the name bank or bank and trust, some combination there. Community development banks, or CDFIs, and they tend to focus on providing financial services to low-income communities. PCR and Lendistry are examples of them. And then you've got investment banks, which help businesses to raise capital in financial markets. Lastly, online and neobanks are the digital-only banks that offer banking services through mobile apps and websites, and they have few or no physical branches. Capital One is the largest digital bank, and Chime is the largest neobank. And then credit union is a depository institution, very similar to banks. The big difference is that their credit unions are nonprofit corporations. They're owned by the members, and generally you have to have some connection to what area or market they're serving, like Navy Federal Credit Unions, mostly Navy people, right? So which one is best to have? Well, that's the million-dollar question. It all depends on your specific needs. I generally recommend that you have a retail bank and also a credit union. Community banks are also a great place to establish a banker relationship, especially for small business owners who might be looking to obtain access to capital. Well, that's our lesson for today on banking. Stay tuned for more information on feeling better about your money. Coach Sneed out.